What's going on, family? As you can see, I'm not in the office right now, but I got some bangers for you. But remember, talk to a licensed financial advisor in your area before you start to invest. I want to get into something that we've been absolutely knocking it out of the park on. I know some people are going to feel like they're late to the party or slow to the show, but this one is still moving, and I want you to realize that we can get paid. But it's not just about the stock. It's about getting in at the right price. Trade with the chart and not with your heart. The first banger is Grab, ticker symbol GRAB. Now, again, I know a lot of people heard the name of the stock, but it's not just the stock. It's about getting in when the time is right. The reason I'm liking Grab right now is because I'm looking at it and I can see that their revenue is up 23% year over year. Why am I interested in that? We're in a bull market, right? A lot of people are seeing so many different stocks running up like crazy. But the thing is, when you see the technicals are good, when you see that the revenue and the financials are also good, this means that you're looking at something that has the potential, but not the guarantee, to run. Now, I've been sending out buy alerts on this one time and time again, and we've been killing it basically every single time, and we're looking for the rinse and repeat. But there are some breakout levels that you got to pay attention to, and this is why I think it could hit those levels. First thing is Grab. They're now to offer a robo-taxi service in Singapore, but it's not happening now. It's going to happen next year. They're working with two companies. One of them is called WeRide, and the other one is called Pony AI. Now you're thinking to yourself, robo-taxis, ain't Tesla doing that? Tesla is doing that, but they're doing that in the United States, and they don't have it fully built out. But just like with artificial intelligence, just like with the internet, just like with all things, it may start somewhere, but then they tend to disperse out through the world. So Grab is one of those ride-sharing apps that has the customer base that these artificial intelligence driving cars are gonna need to be able to access this network of people, really. So I told you, you trade with the chart, not with your heart. So what are we looking at? The first one we're looking at is the lowest buy level. This is where I like it a lot, and that's gonna be in your $4.60 range. Keenan, but this is $6. Yes, you got to know where you love it. You got to know where you like it. I love it at $4.60, so I will really load up down there. However, just because I love it down there, that don't mean I'm going to be a crash test dummy now. I still have to use a stop loss. The next place that I like it, and I love it, is about at $6. Where we sitting right now? We sitting at about $6.50. So I encourage you, if you are trying to get into Grab because you weren't able to get the buy alert, you weren't around for that, then I'm encouraging you to look for the demand zones. The demand zones are important because that's where the institutions are buying it. Whenever you watching stocks go out through the day and they moving a quarter, they moving like 75 cents, very often this is not the institutions who you're trading with. You're trading with the retail investors. Retail investors don't very often move stocks that much. They've done that in the past, but it's not like that anymore. Wall Street continuously changes the game. So what you're looking for now is, when are the big dogs buying it? When are the institutions really making waves? Just like with the whale. When the whale splashes in the water, everybody gets wet. So you're looking for where the whales are going to make a splash, and those are your demand zones. Those are the levels that I just told you. Now, what I'm looking at is to pick it up there. Here's a caveat though. We like buying our supports. But if you notice, when people always look for supports, they often miss breakouts. So you have to put on your trader hat and not just your investor hat for this one. Your investor hat is buy it low, hold on to it. But your trader hat has to be aware of trends and trend breaks. We looking out for this one. For the breakout, this is how you're going to identify it. Notice that we at like 650 right now. If we get above 660, we very likely to come back down, shake a few people out, and come back down to about 630. But then when you see it pass up above that 660 again, that's known as a break of structure. If we see that break of structure, so go above 660, come on down a little bit, and then pass it again, this is when we're going to head towards our $7, our $8, our $10. I know some of y'all at home, where my notepad at, are hearing, Keem, this is going to $8, this is going to $7. I'm giving you the if-then situation. If these things happen, then those breakouts will happen. But if not, we playing the support. And I often tell you, if you want to trade like me and win like me, you got to listen to the whole thing and not just a piece of it. So I want to encourage you, if I'm saying anything that you feel you need clarification on, then ask me in the comments. I'll be right there down with you if I see it in time. The next one that I'm looking at is Uber. Many of y'all been rocking with me. We've been buying this one when it was $68, when everybody told you it was done, when everybody told you the robo-taxi network, and you see how this is a continuation to the other one, but they're telling us the robo-taxi network is going to destroy everything. Guess what? Uber has way more people who have their app who need rides than Tesla has people who have their app who need rides. So when you think about Tesla's robo-taxi network, when you think about Waymo's robo-taxi network, they are gonna need people who need rides. And guess who has it already? Like I said, Uber. That's why we've been buying this one, and it's almost up. I want to say at this point, got to be like 60 or close to 70%. But Uber is not done. The party is not over yet. That don't mean chase it though. You still want to get things at a great price. The market cap for this one is currently 211 billion. This could easily be a $300 billion company. However, you got to make sure that Jerome Powell and the boys ain't blowing our money up with these interest rate cuts too quickly. So when they do something like that, though, they might provide us with an opportunity. This is why I'm interested in Uber again. I often tell you, look at the charts, but also look at the fundamentals of the company. When somebody tells you look at the fundamentals, the main fundamental you're looking for, if any ever, is revenue growth. That's huge. Look at the revenue growth. Are they able to grow their revenue? That's the step one. Obviously, there's more. There's cash flow. There's PE. But if you see that revenue growing, you're looking at a company that is using their money in a way that's growing the sales. And that's what it's all about at the end of the day. So the revenue growth is up 18%. The earnings per share is up 34% year over year. So they told you Uber was going to die? It ain't. And that's why the analysts are giving it higher price targets. Right now we're sitting at 101. They're saying that the lowest price target is 93 and the highest price target is 150. Do I believe that it's just going to jump to 150 overnight? Absolutely not. However, I do see something that a lot of you will see if you download Moomoo. So I encourage you to download Moomoo so you can have access to this information. Look at this orange line right here. You can see that it's going all the way up to 14 billion. Right now, when you look at the earnings that they bring in, it's about $11 billion per quarter. And they're going to jump that 11 all the way up past 12 billion, past 13 billion, all the way to 14 billion. Now, again, why is that important? Just like I told you, that year over year revenue is cooking up. But just like with Grab, I already told you again, you don't want it at any price just because you like it. What do you need it at? In my opinion, right? I can't tell you what to buy, hold, or sell, but I've been making money with these and I want to show you how I'm doing it. I like to get them when the charts is right. The first level I like this at, you may never see it again, but if you do, you know what Keenan Grace is going to do. The first one is 91. If I see this at 91, that's when I'm willing to go heavier. Why? That's one of those demand zones I was telling you about where the whales like it a lot. But what if we never see it down there again? The second level I'm looking at is 96. And I encourage you to write these down. That's where some whales are, but not many. The third level is just under the $100 level. Your 98s, your 97s, your 99s, in that area. Why? Because people's stop losses right now are going to be at about 99, if not 98. And you can get an instance that's called the liquidity sweep. A liquidity sweep is going to let you in when all of the people who don't know what they're doing get stopped out as we head towards our 120s, as we head towards even 150 like some of the analysts are saying. So I got another one for you, but I want this video to be all day because I respect your time. And this one is Nvidia. It's 182, but I'm going to be honest with you. I'm going to be shocked if we never see a $200 Nvidia. And I believe that it can happen much sooner than people think it can happen because artificial intelligence, they're telling you it's in a bubble. But here's the thing about the artificial intelligence bubble. It's not a bubble if it's actually making money. Do you understand what I'm saying? Think about it like this. When you have people who are in high school and they're playing sports and then their income starts to bubble, right? They go on to college. Okay, their income went up 1,000 times. Then they go into professional sports. Their income's up 1,000,000 times. Are they in a bubble or are they also bringing in money for the organization and it's all making sense? Nvidia is that thing. When you see stocks going up, but the money isn't going up, the revenue isn't going up, you're looking at a bad thing. When you're looking at a company like Nvidia, where the stock is going up, but the revenue is still going up, and one day they might stop the musical chairs on that. But since it's still going up, this is still looking like not only a $200 stock, but at least a $220 stock long term. So family, I love y'all. I appreciate y'all. And I'll see y'all in the next one. Like I said, if you got any questions, hit me up and join KGU if you have not done so already. I'll see y'all in the next one. Take care.